Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well. Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning pre-market webcast. Okay, last day of January, and it's been a fantastic trading week. About another 30, 33, 34 room handles yesterday. It's the realities of a decent two-sided tape. You could argue that Monday was pretty much trend down. Yesterday tried to be trend down, but there were some aspects of yesterday that you could really use with regard to the long side. I want to talk about that a little bit because it's going to be important as we get into February and as this tape continues to do what it needs to do, which is, become a little more two-sided, allow the bears to have, some of these couple of day runs and, back and forth. Whether that ends up being over the course of time, whether that tends to retrace a little bit of this really gigantic up move over the course of all of 2017, or whether it just means we kind of hold serve and find a much larger trading range. And I'm talking about a 150, 200 handle trading range, and become much more two-sided. The bears have their moments, the bulls have their moments, and we trade it either way. It's been a long time since we've had that kind of market, but that's the natural progression from the uptrend that we've been in. I'm certainly not calling a top. I think that part of this process is going to be continuing to go back to the highs, making new highs, and then seeing things come off. Today's a pretty important day for the bears. They struggled yesterday. Let's go to the hourly chart. Before I do, the thing that's interesting overall about today is can the bears hold the 9-day, which is up around 39 and change? Can they hold that as resistance and establish that they want to trade below it? If they do, then we've got a date with the daily mid-band. It won't be at 27.96 obviously when we get there. It's the 20-day simple moving average, so it's going to continue to move up with price. But if we start to live below the 9-day, the 20-day is what's next. Okay, hourly chart. The bears struggled yesterday with 18 to 22. You've got support between 28.18 and 28.22 in various forms. You had some matching lows at 20.5. You had some matching lows at 22. We traded as high as 36.75 overnight. The room has been long basically since it's been long for Globex. 25.5, 26.5, that area in there. And the reason for that is if we're going to have support between 18 and 22 for a period of hours, and I've got the Fed coming up at 2 o'clock, the chances of walking up into the Fed are more likely than not. It's not a definite, but it's more likely than not. And we've seen some upside, not quite to 37, and it's still fairly early in the day. Could we walk up to weekly pivot into the Fed? Sure. We absolutely could, and we're set up for that kind of a move. If it doesn't happen, then what I want to do is I want to be patient. I want to wait to see where this pop-up kind of, dies, create some lower highs, and then, you can short it for another attempted move down. The way we dealt with yesterday, and I got to hop onto a 5-minute chart here. Here's a 5-minute chart. This is yesterday. Here's your open. We popped up into the 30, I think we traded as high as 39.5. We shorted this move down, and then you see this ripper here. So we cover here. I was off the desk, but what we talked about was you've got to be aware of the presence of bear market type rallies in this kind of a tape. And I'm telling you right now, if you're a short trader and this is like Christmas morning and your birthday all wrapped into one, just about when you think it's time to open up the biggest present of all, they're going to bounce it on you. Okay? So you need to, take profits as they come, and you can't get stubborn trying to hold shorts or be shorts or fight shorts during bear market rallies. Okay? Don't be stubborn, get long. It's pretty simple stuff. Don't be stubborn, get long. If it's truly a bear market rally, the pop will fade. You can find another way in. So this pop I missed because I wasn't around. We ended up getting short again, and we were long this pop, and then we just kind of we just went with the flow the rest of the day. But you can see how they struggled with 20 to 22. But I wanted to pull this up to illustrate that these pops can be violent. That's a pop from 18 all the way up to 37. Not quite 20 handles in an hour. And if you fight that, you can unwind all the good work that you do here by fighting a bear market rally. Okay. And how do you know it's a bear market rally? Well, it's violent. It continues to make higher highs. And whatever risk marker that you've set for yourself on a trade, if it's a short trade, it's going to break it. And if you're rolling a stop down on a short that's already been profitable, you're going to get stopped out. So when you get stopped out, if you get stopped out violently to the upside, you shouldn't just go Pavlov's dog and just short it again. You need to take a step back, think about what it's doing, take a look at what it's doing, and think about, do I want to get long and then get short again? Or stand aside and wait. What you can't do is get short and stubborn and say, we've got a date with this number or this number, which is, that's just not, that's you trying to impose your will on something that you absolutely cannot impose your will upon. You cannot impose your will upon the market. Can't do it. Okay? So beware of the bear market rallies. Okay. Everybody have a fantastic day. Watch your risk in this market. It's very volatile. It's taking care of bad entries. At the same time, if you're not careful, you're going to take your lumps fighting stuff. Okay? All right. Be out with a wrap up later. Trade them well. I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.